So without further ado, I think it's now, I make the time as 6 a.m. in the morning in the UK, 5 p.m. at night in Melbourne, Sydney, and I think it's 2 p.m. in the afternoon in Perth, and it's probably early evening if you're like dialing in from Toronto or from Vancouver. Hello and welcome to our Minds and Money 5 at 5 show, which today is sponsored by Impact Minerals, Tempest Minerals, and is brought to you in association with the Resource Global Network. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests at 5 p.m, is to maintain engagement between investors and miners through a lively interactive format whilst we wait the return of physical events. A few admin announcements before we start. To make it as interactive as possible, please have your video switched on. In order to ask a question, you've got a couple of ways to do it. There's a chat function, which you'll see at the bottom of your screen. You can go and submit a question there, and then we can go and address your question and address it to the panelists. Or you can also ask your questions live. You just need to click on the invite participants function, and then you can wave your hand and you can get to ask your question live. For this week's show, we have an Australian theme focus, and discussers, we have a great lineup of guests. They are Mike Jones, who's Managing Director of Impact Minerals, Don Smith, who's Managing Director of Tempest Minerals, Florian Grummes, Independent Analyst and Investor for Midas Touch Consulting, and Kingsley Jones, Chief Executive and Chief Investment Officer of Jevons Global. So to really kick the ball, to go and start the ball rolling, handing over to yourself, Florian. What's your outlook for the mining industry at the moment? Are there any trends or thematics that you're seeing?
Hello, everybody. A warm welcome from Dubai. Here it's actually 10 in the morning. Thanks for having me, Andrew. Always a pleasure to be with Minds and Money. Yes, well, I think there are a few general things I would like to mention. First of all, I think it's getting more and more clear now that we are in a commodity bull market. Even though it is still kind of like an early stage, we are seeing most of the commodity indices breaking above their downtrend, their multi-year downtrend lines actually. And I believe this is all driven by the reckless currency creation all over the planet. So basically commodities are showing that inflation is coming. And we've seen, for example, crude exploding 25% since the beginning of the year. Gasoline is up 34%, lumber is up 38%. I think even platinum is up 16%. And copper obviously is doing very well already for nearly the last 10 months. It's up, I think, nearly 100% from the lows in March of last year. And yeah, so overall, I'm very bullish on the commodity sector. You might know this chart, the comparison of commodities against the stock market. And I believe that commodities are still undervalued after a long bear market, basically. And I think we're still in the early stages. When it comes to gold, we have to understand that we had a very nice 2-year run up in gold from 1160 up to 2075. There was nearly 80% gain in 2 years. That's a lot for gold. I know that the cryptocurrency guys will basically laugh about that gain, but in gold, it's a big move and this takes time to digest. So gold is still digesting that move. I think overall it's still healthy. I believe there's good chances that we've seen a double bottom just last week around the 1760, 1770 area. And what's very interesting is that silver is holding up much better than gold. It's actually just all that silver now needs is to break above the $30 level. And then I think it's really quickly going to advance towards the $50 level. And you can see in silver that the physical market is rather tight, especially in North America. The premiums on the 1 and 10 ounce coins or little bars are rather high. So the physical market or the prices for physical are signaling that there is a move coming in silver sooner or later over the next few weeks or months. As I said already, copper and energy are doing very well. I think all the battery related metals are having strong fundamentals, and you can also see them moving. That also means uranium, rare earth, very interesting. I'm a big rare earth bull. And you can also see when it comes to the mining stocks, the big ones are reporting really good numbers. The earnings seasons showed good cash flows. Some of them were able to raise the dividends. I think Rio Tinto now pays like 7%. It's unbelievable in a negative real interest environment, actually. Barrick also, I think, with the extra dividend that they're paying out, it's now 3.8%, I think, the yield, just a dividend. So I think it's very interesting. It's very promising, and I think you can be a more or less buy and hold investor in the sector at the moment. However, as always, timing is very crucial in the mining sector. So if you bought a mining stock last year in the summer, even some of the really good ones, like a Barrick, like a Equinox, like a Newmont or an Agnico, you would be down probably 30-35% right now, even though in the bigger picture nothing has changed. So it's always very important that you make sure that you buy low, especially in the mining sector, because the stocks can move so quickly, 30-40% in both directions, without actually any change to the fundamentals, or even companies reporting good numbers, and still stocks are going down. And that's what we're seeing over the last few weeks in the gold sector. But I'm not worried at all. I think it's actually a good time to buy and add more, especially to your gold and silver stocks.
And just bringing in Kingsley Jones, just sort of like following up from Florian's opening comments, can you just tell us a little bit about Jevons Global, and also in particularly like what investments within what investments in the mining industry you're like looking at, whether there are any sort of like commodity themes or thematics that you are investing in at the moment?
Sure, Andrew. Absolute pleasure. It's great to be here. So Jevons Global is a firm I started some 10 years ago when I left Macquarie Group, where I used to run their thematic funds internationally. We are focused on global equities. We're a relatively small firm, but we're based here in Canberra now. We were our early life in Sydney. We moved down here last year. And that partly was to focus on a theme that's emerging for us, or re-emerging, shall I say. Back in earlier times when I was at Macquarie Group, I used to run, as part of the strategy, a critical minerals focus, which of course now is rather large in terms of interest. And that's part of the reason we came down here to Canberra, because we did some work for the Australian government on that particular space, particularly in the rare earths. But also many, many years ago, my first job, strangely enough, was at the ANU in the seismology department. I'm not a geo by training, I'm a physicist, but they hired me because they thought I might know something about computers. So that's the other reason we're down here. And I must say, I'm really enjoying it. In terms of the commodities, our investments and our focus, let me start with the investments. I think, echoing Florian's remarks, we are very bullish on this cycle. In my memory, the last time I was this bullish on commodities was 2003, when I then worked with AllianceBernstein, and I was really trying to persuade the investment team at that time to get into BHP at the very beginning of that cycle. And I well remember those conversations. They're relevant to today. The conversations were, why should we buy BHP? The price to book value is so high. They're a value manager. And I said, yeah, well, the book value in 2003 was mines built in many years prior, at lower costs. I think we have a similar dynamic today. It's broader, though. It isn't simply about iron ore. If you look at copper, for example, we are looking at a looming shortage, and that's why you're seeing such a bullish copper move now. I don't need to tell anyone on this call that it's particularly hard to find large copper deposits. And, these porphyries that are typically the news sources now are grading below 0.5% in many cases. You do have some interesting provinces that have been no-go provinces for some time, like the DRC, where they have much higher grading copper, and you'll see some of that come in. But in places like Australia, we are bullish, as I think many are, on the exploration cycle and development of undercover opportunities. That's a very big theme for us, is understanding how we can find new mineral deposits that don't have surface exposure, but from neurology or other, guideposts, we might expect to find stuff. And I think that we, at this time, as investors, we need to be very alert to what some of the newer generation are doing in adapting their ideas on discovery, looking for pathfinders and other guides to where they might want to drill when they don't have direct sight to where that deposit might be, and also using a whole range of geophysical and geoscience techniques, from imaging to structural analysis to guide their drill bits. And we think that that's a terribly exciting prospect now, simply because of this looming shortage in some of the key metals like copper. So we're very bullish on copper. We've played that early in the obvious fashion by buying big current producers like Southern Copper, and that's been a terrific ride. There's probably still a little left in that at $10,000 odd copper a ton, but I think now we need to look further afield. In the other base metals, I just generally think it is like 2003. I remember buying Zinifex, a zinc miner back then, and everyone said, be crazy to buy a zinc miner. But as we see these very strong conditions for iron ore and steel, sooner or later in this auto recovery, we will see demand for galvanized steel and other products. And I think even a lowly metal like zinc is probably going to do well. So hearing me say that, you know that everything else is going to do well, because that's pretty unusual. In terms of the metals, more specifically, Florian made an excellent case for a gold bull market, which we think will persist. If I might offer a view on timing, I think right now in the next couple of weeks is probably your ideal time to pick up some of the real quality gold miners that have been sold down heavily, whether it's Northern Star, at the current price, having just absorbed Saracen, and now you would be aware they own the super pit. So, they may be turning into a boring large miner, but they still produce really good margins. So they've got good growth prospects ahead of them, I think, in terms of how they manage that. But that's before you get into a whole host of juniors. Gold Road, I noticed, as with Gruyere and other projects that they have, they're now a solid producer, and they've been sold down very heavily in this period. So I think it's an excellent time for people to be deploying capital into a whole host of those producers. And that gets us to the exploration side of things, where I think personally, I've spent a bit of time in the last few sessions of these online meetings speaking to a host of Canadian and Australian explorers. And I don't want to be naming names, as it were, because I think it's a very rich field. But I would urge people to follow closely what is happening with new exploration activity in gold, specifically around some of the new trends that are developing. I mentioned undercover. If you think about what happened with Kirkland Gold and Fosterville in Bendigo, that is an amazing story of an improvement to an existing underground mine. People didn't think there was much left in it. They were going to depth, and then they suddenly got great improvement and a terrific production story. So I think that's part of what we'll see in this cycle, is new technology is opening up new opportunities to do underground better. And obviously the grades there can be substantial. So I think there's opportunities there, not to write off other opportunities, but I think that's really good. Moving into the critical minerals, obviously rare earths is front and center right now. We personally are keenly focused on neodymium and praseodymium. They are the two metals which comprise about 70% of global value in that market, and that's all driven by magnet demand. So these high-performance neodymium ferroboron magnets that go into electric vehicles and the like. And I think at this time, maybe Linus and MP Materials are a little bit extended in terms of the valuation. But if you look further afield at the new ones in the pipe to go into development, I think Hastings, they just get capital raising. They'll have a modestly sized project at Yangibana that could well come into production. That looks very interesting. And more adjacent to that, and this is a big theme this cycle, is the interest in technology metals means that we need to look downstream at processing. And I would really call out Australian Strategic Materials, with their project in concert with their Korean partners. They've demonstrated an extraordinary development in terms of metals processing, being able to refine titanium at about 30% of the energy of the traditional process. And they're busy rolling out a series of metals that they can process by that. So I think there's terrific opportunities there. And I'll pretty much finish up there, except to say, in terms of metals that we like, I think there'll be a squeeze in certain areas. And I can't make up my mind, but I think it's probably a toss-up between silver, tin, or rhodium as to which one really shoots the lights out this year. And that'll be off a squeeze.
Okay. Well, I think that kind of leads into our first polling question. So perhaps I can ask Elaine to get up the first polling question of today, which is which of the following will perform best in 2021. I think Kingsley's probably given us to which way he'd probably sort of like vote. If you are sort of voting for one of the PGMs or the base metals, the battery metals, please put it in the sort of chat box. Interesting to see as to which one you go and sort of pick out. Just as to whilst you're sort of like voting, perhaps I can just like turn to other sort of like panel members. Mike, if you were voting for one commodity in 2021, which one would it be?
I would say in the precious metals and hopefully palladium. There's obviously been a bit of a palladium rise along with rhodium, and because of the increasing demand still for catalytic converters, in particular in petroleum engines and hybrid engines. And it's been well known, palladium's been in a deficit for pretty close to 10 years now. I think last year the deficit was 1 million ounces. And that's come about quite simply because platinum is mainly used in diesel catalytic converters. And so the demand for diesel engines has dropped off considerably. Demand for platinum mining dropped off, hence the drop in price. And but no one's thought to think that most palladium and rhodium is produced as a byproduct of platinum mining. So as a result, there's been decreasing palladium and rhodium production. And so we're seeing hoarding by the Chinese, and it is one of the precious metals that has significant industrial use along with silver. So fingers crossed for palladium, because that's what we're exploring for.
And just going back to Kingsley for a moment, you obviously sort of nominated 3 commodities. If I had to sort of press you and just say if you had to pick one, which would it be and why?
I think it could well be silver. And the reason for that is related to the bullishness on tin. Solders are really, really important. So what you use for making electronic circuitry. And we do have a huge electronics boom on right now. And tin's a little hard to produce. That's why you're seeing a really tight market right now. There's not too many great deposits. And silver, traditionally was base metals byproduct. But a lot of that has died out for the reasons zinc, lead aren't moving a lot. So I think silver could well squeeze to the upside, and there'll be monetary interest as well. This whole crypto nonsense, but basically, excess money printing, it's got to find a home. And silver is historically, way more volatile than gold, and therefore more prone to a squeeze as industrial clients and monetary speculators both jump on the same train.
And Kingsley, I think in your opening remarks, you obviously talked about silver. Would your vote be for silver, or would you opt for another commodity?
I'll be heroic and I'll go with silver.
Okay. And then Florian, in your opening remarks, you kind of also were quite bullish about silver. Would silver be your choice, Florian, or would you opt for a different commodity?
No, it would be silver for sure. I think I'm especially looking also on the technicals. I mean, on the charts, and silver just looks very bullish, and it's consolidating. And actually, silver and platinum are the both most inflation-sensitive metals, and I think it doesn't take much to break through the $30 level, and then silver will quickly run towards 50. So I think silver is my bet. Yes.
Okay, and just bringing in Don Jones. Don, what would your vote be and why?
I think silver is a solid choice. I also think gold, for the reasons that Florian mentioned earlier, that it's and others have mentioned that it's had a big drop, and the underlying dynamics are still the same, that it'll go up. If we're looking at base metals, I think copper is a safe bet, even though it's at a high right now. We've got major infrastructure coming in the US, Europe, and particularly the Chinese Belt and Road project, which kicks off this year. There's going to be a ton of copper required, and it's in deficit.
Okay, thank you very much for that. And just probably just as like a last question, just going back to both Kingsley and Florian. I'll probably go to Florian first and then Kingsley, but the same question for both of you. You've obviously been within the sort of like investment and finance industry now for 20 odd sort of like plus years. How does this commodities boom compare with the previous one? I'll turn to yourself first, Florian.
Well, I think first of all, the whole world is participating now. Second, we never seen so much currency creation or money printing on a worldwide basis. I mean, any and every central bank is printing like crazy, And I think I've just recently seen a chart. I mean, the Chinese topped everything else. I didn't know that in that detail. I mean, they've been so massively expanding basically the money supply. So I think that's unprecedented. And you always have to be a little bit careful with the gloom and doom kind of attitude that is common among gold bugs. But you have to be aware that we are 50 years into this fiat money system now. It's been 1971 when they basically cut off the gold standard. And usually in mankind's history, 50 years is kind of like the lifetime of such a paper system. So I think it's unprecedented. And I believe that we are in a cracker boom. Everything will push higher, actually. So I'm not afraid of any immediate stock market crash. I think that basically all this currency creation will push your real estate prices higher. It will push the stock market higher. It will push your grocery prices higher at some point. And it will also especially push higher commodities and especially the inflation-sensitive metals like silver and platinum.
And Kingsley?
Yeah, I would agree broadly with that assessment. The things I might add to it, I think Florian's made an excellent case of the monetary stimulus and others. I would also say that I think this cycle will be distinguished by a broader and deeper demand pulse for metals outside of the traditional sort of construction and auto industry. So what do I mean by that? I think what will really drive this cycle, as we've already seen with copper and people fastening on electrification of vehicles, is that because we have these low rates and effectively negative real rates worldwide, there's a terrific opportunity now for the emerging nations to, shall we say, jump on the train of new infrastructure and new technologies like renewables and other methods that are going to be much more metals intensive than the previous fossil fuel energy system. And we all know that we're probably looking at multi-trillion-dollar investments required to phase out fossil fuels. And I think that that is not a sudden process. I think it's a gradual process. But at the margin, it drives enormous demand for metals that we haven't traditionally thought of. As Mike Jones mentioned, catalytic converters alone, is really a big driver of PGM. Aerospace demand is huge for specialty metals. And so titanium and other products, I think we'll see great market demand for. And I mentioned ASM that have that, we think, world-beating process to produce titanium at 30% of the energy cost. If you lower the prices of these metals through new technologies, new finding methods, you will get the classic Jevons paradox increase in demand, which is what our company's named for. You get more efficient, you use more. And that is really, I think, the biggest driver behind all of this, is that we're just going to see the world get better at using metals to do more, and they'll need more.
Thank you very much for that. And I think I think we just have the polling results up, Elaine, just to see as to how everyone sort of voted. I think one of the most popular answers was one of the battery metals. And if you did vote for one of the battery metals, please state in the chat room as to which battery metal you actually would have voted for. So that kind of moves on to our first mining update of today's show. Don Smith is a geologist and entrepreneur with 20 years experience in the mining industry. He's worked in operational development, exploration and consultancy roles for junior through to multinational firms, spanning over 10 countries and numerous commodities, including base and precious metals and energy minerals. Don's corporate experience includes project acquisition, financing, development and company management. Don has been the founding director of a number of private and public resource companies, including the successful listings on the ASX of Platypus Resources and Alderan Resources. He's currently involved with several startups and consults to the industry. Over to you, Don.
Thanks a lot. Welcome all the listeners, and thanks to the fellow panelists. And start off with Tempest Minerals. You're going to the next slide, please, Elaine. Thanks. Yeah. All right, so a quick overview of the company. We're a junior explorer. We're currently focused on Western Australia. We've got a great team and some really, really excellent projects that we're really excited about getting out. We only recently rebranded to Tempest Minerals late last year, so many people haven't heard our story yet, so I'm looking forward to getting it out there to everyone. In terms of our structure, we have a modest market capitalization of $8 million, and about 270 million shares on that issue. Next slide, please. So there's a quick overview of our team. We've got Brian Moller, who many people may know as our chair, and myself as MD. And we've also got a really strong non-executive team there that we've positioned ourselves not just as an explorer, but when we make our next discovery or our next acquisition, we will be well positioned to go straight into being a developer and a producer as well. In terms, yep, thank you. We've got a number of projects spread out through Western Australia. A large number of them are focused in the Yalgoo region, which is on the next slide. Thank you. And as you can see, we've got an extensive land holding in Yalgoo. For those who aren't aware of the Yalgoo region, it's about 5 hours drive north of Perth, about 450 kilometres, 400 kilometres. It has a number of world-class mines already in the area, including the prolific Golden Grove VMS camp and several million-ounce mines, which are in production, as well as the several billion-tonne Carrara iron ore project there in the bottom left. It's an unloved region until recently, a very unloved region. A lot of the discoveries were made in the 1970s there, and not much has really been done there geologically since. And in the last 12 months, we've seen a big influx of other players coming in there with some high-profile successes already. So our advantage in the area is that we've been there for several years already, and we understand the geology very strongly. And it was interesting hearing some of our panelists talk about interest in the data and working undercover and these kinds of things, and that's one of the things that we've been really focusing on there is the structural interpretations and looking undercover. And ironically, at our Malaya project, you can see there the historic maps show that it is an undercover sequence there, but by going for a walk through the bush, we've actually discovered the same rocks that host Golden Grove sticking out of the ground. It's not like it's even undercover, it's actually outcropping. And that's really exciting because that's never had a lease on it in history. No one's ever explored it. So we're really keen to get into that work. Next slide, please. In the short term, we've got the Messenger project, which we're planning on drilling next week, or in the coming weeks, I should say. That's we have 2 targets we're going to be drilling there. We've got a multiple kilometre long magnetic and geochemical high, which also has a number of historic shafts from the early 1900s, which were producing at the time multiple ounces, between 2 and 10 ounces per tonne. And it's been barely explored since then. It's been held in private prospecting hands, and the little drilling and exploration that's been done there, the one hole that was drilled in the correct location, drilled 2 meters at 200 plus grams per tonne. So we're very excited to see what we get in our drilling there, and it's quite a compelling target, even if you're not a geologist or a miner. You can see that. In terms of where we're going next, you can see that we've got projects and we've got ongoing active exploration, and our real goal is to make some world-class discovery in one of our project areas. And on top of that, we have a number of projects that have existing mineralization, and we're also looking at how that we can upgrade that and turn those into resources, and with the goal of becoming a producer in the short term. Next slide, please. In terms of things we're up to, you can see the news I mentioned. We've got the drilling coming for Messenger. We'll be drilling at all our other projects throughout the year, and I'll be attending a lot of the events such as this one within the next year. Next slide.
Okay.
Thanks.
Thank you very much for that. I'll go and kick the ball off with a question of mine. I was looking at your website the other day, and you stress on your website quite extensively that you are a data-driven company. What do you mean by that philosophy?
That's a really good question. It's one of my favorite topics. You'll see a lot of companies talking about this, about the digital revolution in mining and this kind of thing. And to be frank, not that many companies are actually doing that. There's a lot of talk, but not much action. So we are data driven in many ways, and one of those is that we're a purely digital company. We're a paperless office in the field. Our team uses apps, some of them that we've written in-house, and all our data goes straight to the cloud where it can be reviewed in real time if we need to. But it doesn't just extend to geoscience. We also have the same approach to all our data, and that includes marketing, promotion. I'll be reviewing the data after this event and seeing what effect it had on our stock price and our volume and all those kinds of things. So it's a real central to our company. Yeah.
And just bringing in our investor guests. Sorry, Mike. Sorry.
Sure, mate.
That's it. Are you still using a hand lens though? Just want to make sure.
Yeah, and a manual compass for sure. Yeah.
Just to bring in our investor guests, Kingsley, I think you were talking a bit about the sort of importance of technology earlier. Do you have any sort of like thoughts on sort of like questions for Don?
Yeah, I think the straightforward question for Don would be, given that you mentioned, I mean, a monstrously good grade over 2 meter intersection from the past.
Sure.
Just remind us how those search technologies from aeromagnetics on have changed since the time when that hole was drilled.
That's an excellent question, and I guess it goes even further back. As I said, some of those shafts there were some of the earliest discoveries in Western Australia, and there's no way that the old timers could have had access to that kind of information that we have now. And even the data that we have, that magnetic image I showed you, we've even in recent times, in the last 12 months, last 6 months, we've completely used big computers to remodel that again in ways that just weren't available in terms of processing technology in the past.
Follow-on question for you, Don, about that. You mentioned the structural interpretations and so on. How has the recent developments in cloud computing and performance of computing aided the process of taking these data dumps, if you will, from the sensors in and producing structural models or other guides to where you might drill?
Excellent question. We do that all the time. So as I said, our data is always going in there and being updated by our team. We also have a PhD in structural geology on our team, and Dr. Anthony Mori, and he looks at the data and we found it enormously useful. So as I said, even just reprocessing the old geophysics, we've seen things that people didn't see in the past, and that's how we've identified the fantastic targets we have.
You know, that's funny. I was speaking to another miner who introduced me to JORC arbitrage, the concept that if you had old drill holes that didn't qualify for a resource, they could well guide you where to drill now. And you could be sure to get the good grades that way. But here you're drilling into virgin ground, I believe. Is that correct?
Yeah, largely virgin ground. Of course, there's a few holes around, but yeah, a lot of the targets have been unexplored. You're exactly right. Yeah.
Bringing in other investor guest, Florian. Do you have any kind of questions and thoughts for Dom?
Yes, I would be interested in the financial situation of the company. So how much money you have in the bank, and can you tell us already how long that will last, and if you might need another financing at some point this year, next year, or maybe even later?
A common question. Thanks, Florian. We've got about $1.5 million in the bank, and we think that we can get a few quarters out of that. Okay.
Are you invested yourself?
Yeah, I'm one of the top 3 shareholders. Yeah.
Okay, good.
Again, going back to your website, again on your website, like a lot of other mining companies, you stress that you are a sustainable mining investment option. What do you actually mean by that? And I guess what makes you stand out from your peers?
Sure. Similar blunt response to my digital one is that a lot of people use buzzwords but don't necessarily follow it. And but the short answer is we were historically a purely lithium focused explorer, and that belief that the future is battery technology and sustainable energy and technology and that kind of thing. That's a big part of it. A second part of it is that just from a purely looking at business literature, all companies that have followed an ESG route as a core foundation of the company, they're all the more successful companies these days. So it's if a company either puts it as a core part of their company or they have it as a tack on, and where the former, it's a core part of our company, and we filter all our decisions through that before we do anything.
And I'm also going to ask the same. I'm also going to ask the same question to Mike Jones as well. I mean, what are your ESG investment criteria if investors ask you that question?
Yeah, well, look, we're an early stage exploration company, and so we obviously abide by all the codes of conduct, etc. For exploration. The real driver for ESG, is as you start to develop something, and your footprint gets larger, etc., etc. But look, we just had an audit from the New South Wales Department, and very happy with all the work that we're doing. And we sponsor a after-school activity program for Aboriginal children in the Dubbo and Orange area. So we've been doing that for quite a few years, and they do extracurricular art and writing lessons, and they get authors and artists from around Australia to give it these extra lessons, and annual prize every year for the best the best award. So we're out there supporting the communities that we work in and doing the right thing.
Okay, and just another question that's popped in on the chat box from Jacob Ambrose Wilson of Resource Global Network. This is for you, Don. Hi, Don. What is the reason for the recent rebrand, and how does the name Tempest Minerals reflect your business focus?
The reason is that the previous company name was purely lithium focused, and we're now a diversified company. So in terms of how does Tempest reflect, there's a number of meanings behind the name, but one of them is very rough Latin translation, temp est, it is time. So we think it's a time for a change and doing good things in the industry.
Okay. With that, let's just get our second polling question on, because we talked a little bit about ESG and sustainability. The polling question, how important is ESG as an investment criteria to you? And whilst you're voting, I'm going to ask that question to Florian first and then Kingsley. Florian, how important is ESG investment criteria when you're looking to make an investment?
It is important because it is so important to so many other people. So if I don't consider that, I might buying an interesting stock and figure out that nobody else wants to buy it. So I think it's very important, yes.
Does it actually vary between if you're investing in an exploration play as opposed to an established producer?
I mean, of course, a big producer might have more of an impact, but then again, they have certainly much higher standards, and they usually have a big professional team to tackle that issue. So I think it's, in the end of the day, it's the same in my approach, but it is important in both ways, yes. I think overall, it must be stated again that the fingerprint of the mining industry is rather small in comparison to other industries and sectors. And people really need to understand that mankind only can improve with technology, and for the technology, we need the minerals. And I see lots of good progress in the mining industry. I think nearly everybody is taking this issue now really serious, and we need the minerals anyway to get forward. So it is an important issue, but I think it's also shouldn't be overstated.
Yeah, and Kingsley, when you're making your investments, how is ESG in your top 5 investment criteria when you're looking to make an investment, or?
Yeah, it's certainly something that we pay close attention to for much the same reasons that Florian mentioned. I mean, we have to recognize mining, it involves rocks. I mean, rocks are dirty, right? But we need the metals, and as Florian also pointed out, the footprint of mining isn't quite what people think. The main ESG risks are the obvious ones where we see it go wrong, and that's what we're particularly concerned about. So, in no particular order, I mean, Samarco with the dam collapse, clearly that was a problem with the tailings dam, and that has very, very severe consequences. So we need to be very alert to that. In that particular instance, you can praise or fault BHP on different elements of it. I think one of the things they did well was they really promoted within the industry the idea that we really should improve our engineering and geotechnical knowledge of how tailings dams are built and constructed. So they took a proactive effort there to improve the situation. So I think that's a good example. Another example of where it gets very difficult is if you're looking at a particular metal like palladium. I mean, you know, most of it's going to come from Africa, North America, or South Africa, North America, or Russia at Norilsk. And if you're trying to get exposure to, you know, for example, Norilsk, with that you buy an historical legacy of pollution in that area. And frankly, probably the only way it's going to get cleaned up is if the mining company there makes some money and actually put some of that back into the community. So it's a very difficult question when you get into those areas where there's a big trade-off between what you need and what the consequences of that are, and how you rectify what may be bad that happened in the past.
Thank you very much for that. I think if we just get the polling result up, Melaine, I think that the majority of you voted for quite important. So it's good to know that it's obviously certainly sort of like front of mind, and refreshing to say that nobody voted unimportant. So our next mining update is from Dr. Mike Jones. Just a bit of a brief sort of background for Mike. Mike completed his undergraduate and postgraduate studies in mining and exploration geology at Imperial College London. From 1994, he consulted to the exploration and mining industry, specialising in the integration of geological field mapping and the integration of chemical, geophysical and remotely sensed data for target generation. Dr. Jones has worked on over 80 projects, both in greenfields and near mine exploration, in a wide variety of mineralised terrains, and was the founding director of Lithofar Consulting Geologists in Perth, Australia. He was also the team leader during the discovery of a significant gold deposit at the Higginsville Mining Centre near Kalgoorlie, and an iron ore deposit near Newman, both in Western Australia. Over to you, Mike.
Yeah, thanks, Andrew, and great to be here again. And so very topical that I'm actually in Broken Hill, and it's my first visit out of WA for 11 months, and actually great to be here. The borders are finally open with no threat of quarantine, and so I've been able to get over here. And the reason we're over here, I'm not sure if people can see this, but hopefully you can see that sort of nice shiny metal in there. This is some diamond core that we drilled some time ago. And this is the ore of the moment based on our discussion here, because it's carrying 25 grams of palladium, 11 grams of platinum, 1.5 grams of gold, 1.5 ounces of silver, 500 ppm of cobalt, and 7% nickel and 7% copper. And it's actually probably amongst some of the most the richest ore in Australia, if we can find a lot of it. And that's what we're hoping to do this year as we enter probably the busiest 6 months of the entire time that we've been listed. So look, we've got 3 projects that we've got stand a really chance of making a big discovery of. I'm going to talk about the first 3 rolls of the dice. We've got 2 at Broken Hill and 1 at Commonwealth. So if we can move to the next slide, Elaine, that would be great. Now I am actually running this off my mobile phone in the hotel lobby, so hopefully you'll be able to hear me. And so this that ore that I just showed you comes from a prospect that we've got at Broken Hill here in New South Wales, and it's got incredible grades. And the prospect comes from the southern end of a trend here. I'm not sure if my slide is showing here, but it's about 9 kilometres long, shown in green there. And it's basically almost dripping in PGEs, platinum, palladium, nickel and copper over the entire 9 kilometres length. And we've had some breakthroughs in our drill results over the last couple of months, just before Christmas, with some more assays to come in the next few weeks. And we're finding some nice high grades of all of those metals there. And the interesting thing about this ore is that it also contains high grades of rhodium, sort of between 1 and 5 grams. And there's not many places in the world where you get those sort of levels of rhodium. So if there's a rhodium squeeze, then we're in the right place there. So we'll be doing some follow-up work there probably in the next quarter, along with, if you like, next slide, Elaine. Along with some follow-up work at Little Broken Hill prospect, which is also at Broken Hill. And here we've got a particular geological unit called a gabbro. It's shown on the right-hand side and outlined in red. And that's about 6.5 kilometres long. And amazingly enough, it's got anomalous platinum group metals all along the western side. But until we started, there was only 1 drill hole deeper than 25 metres into the entire intrusion. And we just completed our first round of drilling, and we've generated some very exciting results. and as shown here on the left. So we've intersected a particular unit. It's called an ultramafic unit, and we're getting sort of 50 to 60 meter thick intervals of low-level platinum group metals. So we call it 3PGE, which is palladium plus platinum plus gold. And then we're getting narrow intercepts shown in red of higher grade, sort of 12 meters at nearly 1.5 grams of the 3PGEs, exceptional low-grade nickel, copper, all the way through it. And now this is first reconnaissance drilling that's ever been done into this area. The results are really extraordinary. We really feel that there's the potential to host a major discovery here, and we'll be also drilling there along with Platinum Springs, probably in the second quarter this year. Next slide. And the reason that we're excited is that at Broken Hill, we've done a lot of work on these rocks. We're also into the big data and the science in the same way Don is. And it turns out that Broken Hill was in the same place at the same time as the massive Jinshuan deposit in China. And this is a map of the world 820 million years ago. And very big nickel province, and Broken Hill was part of it. And so we see some very strong deep-seated geological reasons to be looking for nickel here. Next. But the reason that we're not going to run straight back there is that within a couple of weeks, probably 2 to 3 weeks, we'll hopefully be drilling at our Wellington porphyry copper gold target. And this is our Apsley prospect. It lies about 50k south of Dubbo, which is where the big ASM rare earths mine is going to be. And here we have a soil geochemical anomaly, and the scale there is it's about 2 kilometers long, and it's in gold, silver, platinum, palladium, and copper, and it's surrounded by a halo. So I think I've probably got the wrong name up there. It's got wifey gold poo, but in fact that should be zinc, lead, and manganese. And there's basically a halo around it, and it has a very distinctive pattern called the zinc donut. They're very well known around major porphyry copper deposits. There's one shown there from wifey gold poo at about the same scale. That thing hosts about 50 million ounces of gold and probably 15 to 20 million tons of copper. And we've got something of the same size. And the last slide. At surface, we found copper. There's never been a drill hole into it. We've just announced last week the results of our geophysics over this thing, and the purple areas in the middle diagram there are shown indicate generally disseminated sulfide of the type that you see in these porphyry copper deposits. And we can see it directly underlays the geochemistry, which is shown in the bar chart: gold, copper, palladium, and platinum. And it stretches from surface down to probably 300 or 400 meters below surface. And we've got multiple sections over that 2 kilometers where we have the same kind of relationship. Never been drilled. This is probably one of the best undrilled anomalies of anything at the moment in Australia, in our view. And we'll be starting there within a few weeks. And as it says there, we think this could be the strawberry jam in the center of our zinc donut. So look, it's going to be a very exciting 6 months, and great to be telling people about it, and happy to answer any questions. Okay.
First question is from the audience, from Jeff. What is the likely cutoff grade for PGM?
Well, it depends how many that you have, but if you run on, if it was just a palladium mine, I mean, palladium is running a little bit more than gold at the moment in terms of price. So you're probably looking at the same sort of same sort of grades: 1 gram, half a gram, 1 gram.
Okay. Again, bringing in our investor guests, turning to yourself first, Florian. Do you have any kind of thoughts on the project and questions for Mike? Can we just unmute Florian? Thank you. Can we unmute Florian, yes. Elaine?
Yeah.
Hey, sorry, Florian, you're back with us.
Yes. Well, first of all, same question to Mike as I did to Don. So what about the financial situation of the company? How much money you guys have in the bank, and any need for financing in the near term? And how much are you invested yourself?
Yes, good questions. So look, as of December 30th, we're 2.5 million in the bank. We're probably planning to spend about $1 million on the drill program at Apsley. Starting away. So the idea would be, hopefully we'll get some hits, and if we need money, well, we're obviously going to need money at some point, do it at a higher price. So that's the plan there. And then in terms of my own equity, I don't own as much as I used to when we first started the company. So it's been diluted. I've contributed to various rights issues over the years, but we are actually well incentivized by options, at various strike prices. And, that's good enough for me. If everything goes as I would hope it to be, I'll probably end up with a similar percentage of the company as when I started. And I think that's that would be a fair reward for for the work and effort that we've put in.
Okay.
Another question that's been sent in from the audience. Hi, Mike. Is it just the 3 holes is it just the 3 holes you're planning to drill at Apsley? And what are the rough assay turnaround times at the labs currently, assuming a 300-meter depth? I think that's from James from Euros Hartley's.
Yeah, that's right. No, we're planning basically a 3,000 to 5,000 meter drill program. So it'll be between 10 and 18 holes, and we're going to be testing 6 traverses. So that's a fair amount of work. We're working rapidly on sneaking around the delays that you get in the assay labs. Because we're in the eastern states, it's not as bad as it is in Western Australia, and we've actually been offered some very good turnaround times at labs that aren't actually close by, but it's only an extra day to truck it there. So yeah, we're doing our best to get turnaround times within 3 weeks, which in this at this present moment is pretty good.
Okay, Kingsley, do you have a question for Mike?
Yeah, Mike, those analogs you showed with the donut business and Apsley, how important is that to have something that can guide you a little bit, and to what extent has that helped you determine where you might drill along with your survey data?
So the thing about the zinc donuts is that, which are, as I say, well known in porphyry copper exploration around the world, is that they indicate that the upper parts of the system are still preserved. It's lower temperature minerals that generally form above the sort of the core of the porphyry. And so to us, that's great. It means there hasn't been a huge amount of erosion. And so if we see something, we should have the whole system preserved below us. And but the fact that we're getting the chemistry of the gold, the copper, the palladium and the platinum is also indicative that it's actually not far from the surface, and that's what we thought. And our geophysics has proved that, where we're getting these chargeability anomalies, which indicate the possible presence of the sulfide, are actually coming to surface, kind of many places. And we showed, I didn't talk about it in detail, but there's many places in that area where there's copper at surface, chalcopyrite, bornite, as well as the weathered minerals. So look, we think it's great, and the important thing for us is the scale. The pattern is very coherent over a very large area, and just talking platinum and palladium again, they're actually very specific to the type of porphyry that we get in the Lachlan Fold Belt, which is where we are. So I didn't really talk about the place where we are, but we're in the Lachlan Fold Belt, north of Cady Ridgeway, and then recently Alkane Resources have had their discovery in the Boda Kaiser discovery. They've got rigs going flat tack over there at the moment, and there'll be more results from that coming up. And we're only probably 10 k's from them in that area. So, sorry, was that most of the question answered?
Yeah. Thank you.
That's right. I've been out in the field all day, getting blown around in the heat and the flies. So it's been great. I've loved every minute of it.
Mm-hmm. Where do you want to be as a company by the end of 2021, Mike?
Well, look, we'd love to be absolutely flat tack with discoveries. We really think that Apsley is one of the best chances we've ever had. The work at Broken Hill, it is very technical. People have followed our story. We've made some breakthroughs in terms of using data to identify vectors to help us get to the PG mineralization. And there's a lot of work and effort that needs to be done there. But I don't say these things lightly, but I'm getting an increasing sense that we're edging closer to what we came to do in Impact, which was to make a world-class discovery. People who know me, over the years, that's really been our aim. And we're not a project developer. We do joint ventures if we have to, but really we're here to drill the big targets that we develop ourselves. And we've got 3 or 4 of them that we're going to do this year. So let's hope that we're at 50 cents by the end of the year.
And just bringing back sort of Don, where do Tempest aim to be by the end of 2021? I mean, if there's a couple of key milestones potential investors can expect, what would they be?
Yeah, sure. Not to be trite, but similar answer to Mike. We of course we want to make the big discovery and go into that phase. But in terms of the milestones, we're looking forward to getting the drilling done in the coming weeks and getting some good results from that, and also drilling some of our other projects later in the year.
Sure. And then just a question, final question for like both of you. Just we talk, obviously this is an Australian theme sort of show, but I'll ask it to yourself first, Don. What is your shareholder registry like with regards to Australian versus non-Australian investors? Is that something that you look at closely? How sort of like important is it to you?
Oh, look, I encourage everyone to invest in our company, but we have a strong Australian registry at the moment, but we do have some international investors, both current and through historically. So yeah.
And same question for yourself, Mike.
Yeah, so look, we're held 22%, 23% by two German groups. One's a family office out of Dusseldorf, one of the wealthiest families in Germany. And then the second one is ABC, which is a subsidiary of Deutsche Balaton. And they're a significant investor in probably 13 or 15 Australian resource companies, mainly mid-tier and emerging miners. It's got a handful of explorers like ourselves. And they've been phenomenally successful in the space over the last a few years, and contributed to every raising that we've done since they came on board.
Okay, thank you very much for that. And then just like one question for all like four of you. I think in Florian's opening remarks, Florian mentioned Bitcoin briefly. I then believe that Kingsley used the term crypto nonsense. Hopefully I'm quoting you sort of correctly, sort of Kingsley. But just a question for all like four of you is, should any of our guests who are any of our audience who are listening into today's program, should they be investing into cryptocurrencies in 2021? I'll start off with yourself, Florian.
Well, I bought my first Bitcoin in 2013. I'm a big Bitcoin bull. I've been for quite some years one of the few gold bugs who always said, like, you want to have both. You want to take a look at cryptocurrencies, but not throw away your gold, but keep and invest in that sector too. And I think it paid off very nicely. What I think people really need to understand when we talk about cryptocurrencies, there is obviously a few thousands around now. Many of them are very questionable, if not scam. However, what I really like, and actually that's basically what gold made me, I'm a believer in free markets. And I see the cryptocurrency sector as one of the few sectors left, which is obviously kind of Wild West, but at the same time really a free market. And I see lots of very interesting, exciting projects. I think there are very smart, young, creative people in it. I think decentralized finance is going to stay here and grow massively over the next few years. So you want to take this sector serious and take a look at it. And you can have both. You can have gold and Bitcoin. There is no reason why you need to go only one way. People need to understand that Bitcoin is a decentralized system, and that is a huge invention. So far, it has been doing a very stable job over the last 10 years. And in contrast to gold, the interesting thing is that, the supply of Bitcoin will never be affected by any amount of its increased demand, which we have seen in gold. For example, last year, every day I had like 5 private placement offers on my table. And lots of new mining companies are out there now digging for gold because gold prices have been rising. So at some point in the future, we will see more supply coming to the market. Not now, it will take time. We all know developing a mine takes probably 10 years, lots of money, lots of energy, lots of smart people, and especially energy and money. But Bitcoin is really interesting, and you really should look at it and take it serious. And I always recommend to people, take $50 and start doing it. It's not the question like betting everything. You don't have to bet the farm, like this is always the feeling that I get from these discussions. People treat it like it's all or nothing. No, you take $100, $50, just try it. And if you feel comfortable and understand it a little bit more, then you can increase your bets. But you never want to invest more than, I would say, maybe maximum 5% of your net worth in that asset class at the moment, especially if you don't know exactly what you're doing there.
Yeah, and just bringing in Kingsley, obviously you used the phrase crypto nonsense earlier on. Do you have any of your investment holdings into cryptocurrency, or are you a little bit more cautious than Florian?
No, I don't have any holdings in crypto, and Florian makes some good points. The reason I use the phrase that I do is that I guess from a different angle to Florian's reasoning, when I look at it, I feel I do understand its purpose in a monetary sense with the limited supply. And to be honest, that's why I avoid it, and might help to explain what I mean by that. The reason I avoid it is that the particular dynamics in cryptocurrency produce this sort of rolling, perma bubble, if I can put it that way. And what I mean by that is that every so often, you do this halving business that reduces the reduces the payment to the miners, and that has the effect of providing, if you will, some fundamental support to a price rise, and that has the effect of giving it another pulse upward. Now that's by design, and I appreciate that's by design, and to some people that's appealing. It's not appealing to me because, as we're seeing with it, it has this propensity to go on these very, very big upward moves. And by all means, go ahead, do take Florian's advice. It's good advice. Put some money into it and then participate in those moves. But the trader within me says, yeah, but if we're going to see an 80% drawdown on the top, this is not something that, in my view, will ever, and I mean ever, be a functional currency of an operating company, because their costs are going to be in other things that don't do that. So I think perhaps what we'll see later this year is, it's a great move now. And I wouldn't cap the upside. There's no reason why it can't go to $100,000 a coin over the next short period. But, the Teslas of the world that are putting their treasury funds for an operating company into this class of asset, I think are going to have to wildly hedge back to US dollars, which is where their functional currency is for costs, in which case they've totally destroyed the purpose of having an alternative currency if they're hedging it out, or they're going to witness a significant write-down on their cash holdings that might easily wipe out their operating profit. So for me as an investor, that's the reason I'm cautious about it. I accept that, it's wonderfully innovative from a technology point of view, and I can see why it's likely to continue going up and down and up and down, but trending up until people potentially, get exhausted with that, or they find some means to contain the volatility, because it's the volatility that makes it really problematic as a unit of account or pricing or functional currency. It's just a disaster from my perspective for that point of view.
And just briefly bringing in Mike. Mike, so cryptocurrencies or like investing in impact?
Well, they're both the Wild West, as someone said. I mean, there are 700-800, resource companies. Some of them are scams, apparently, but I wouldn't know any of them personally. And cryptocurrency is the greatest asymmetric bet that anyone in the world can possibly have over the next few years. And like Florian said, I urge you to go and have a look at it, invest a little bit of money, take the speculation. Impact is a very speculative stock. We're not a producer, we're not a developer, we're a speculation. And people should look at the two things in exactly the same way. Don't bet your life savings on impact. Don't bet your life savings on Bitcoin. But crypto, when you get into it, it's not just a currency. There are actually functional, there are actually working businesses generating income, doing things that standard businesses do. They've just been completely replaced by a decentralized blockchain and database. So look, it is the thing that's going forward. I think everyone should look at it. At one point on the volatility, if you made lots of money, then it's sell BTC and buy IPT.
Mm-hmm. And Don, Tempest or cryptocurrencies?
Oh, look, Tempest always. I mentioned earlier, I may have alluded that I'm a bit of a tech nerd, so I love the cryptocurrency story, but I've got more than enough on my plate with Tempest, and however, I urge everyone to investigate it, and it is amusing because you hear a lot of people mention the word understanding cryptocurrency, and in that way, I think it's a little bit like quantum mechanics, where you go, when you think you understand cryptocurrencies, you don't really understand cryptocurrencies. So, yeah, it's a speculation, isn't it?
Well, thank you very much for that, Don. I think that brings us to the top of the hour. So once again, many thanks to our guests for this week. Also, a big thanks to our sponsors, Impact Minerals and Tempest Minerals, as well as the Resource Global Network. See you next week. Until then, stay safe. Thank you very much. Goodbye.
Thank you.
Thanks, everybody.
Bye.
Bye.